I'm Gina Bongiovi, and I'm a lawyer who works with startups and small businesses. And in this video, I'm going to talk about the myth of forming an S Corp. I have a lot of clients that come to me, or they call me and they say, I want to form an S Corp. It's kind of a technicality, but that's not exactly possible. So let me explain why. First of all, the IRS allows entities like LLCs or corporations to elect to be taxed certain ways. So basically there are two different worlds. You have the legal world over here where you choose your entity, your sole proprietorship, general partnership, limited partnership, LLC, corporation. And then on this side, then you have the opportunity to choose how you want your entity to be taxed. But first you have to form an entity. So most of the entities I deal with are either LLCs or corporations. So if you choose an LLC or a corporation, you form it at the state level, you get your EIN, which is your employer identification number. It's kind of like the social security number for your business, so you don't have to use your own social security number. Then you have the opportunity with the IRS to determine how you want your entity to be taxed. It can be taxed as a, so for instance, if you form an LLC, you have four options. You can have your LLC taxed as a disregarded entity, which is essentially the same as a sole proprietorship. You can have it taxed like a partnership. You can have it taxed like a subchapter S corporation, or S Corp for short, or you can have it taxed as a C corporation. If you form a corporation, then you only have the option of choosing between an S corporation and a C corporation. Now, depending, or when you make this decision, depends on how much money you're making that year. And even though I'm not a CPA, I've heard through the grapevine, many CPAs say that when you're making about $50,000 a year, it makes sense to have your entity be taxed as an S Corp. So if you have an LLC that's currently being taxed as either a partnership or a sole proprietorship or a disregarded entity, then once you start to make $50,000 a year, then you can do the S Corp. The catch with the S Corp is, because there's always a catch, it is the IRS after all. The catch with the S Corp is that you have to put, as an owner, you put yourself on a salary, and then you have to pay the payroll taxes and unemployment insurance and everything that comes with hiring an employee. So you make yourself an employee of the business. And that's why they say you should be making at least $50,000 a year so that the deductions you can enjoy offset the expenses that you pay, either a payroll service or something to pay those taxes. So you have to have an entity first before you choose to elect to be taxed as an S Corp. So remember, legal world, tax world. Neither one is particularly fun. Thank you for watching. If you're interested in other videos, please click the like button.